So, all here is the weekly outlook. I'm going to start with DXY. I'm going to come up to the 1 month chart. So, we've talked about this last week. There was this low here on May. Now, this June then expanded lower, took out the previous month's low, sorry. So we expanded lower, then we've got this run up, and this here, because we've closed in this gap straight away, we've not left what we would call a fair value gap. So that there between this low and this high, that is a fair value gap. Yep, that there. That would be a fair value gap. But in this case, we have not left a fair value gap. So we ran straight up. We've done what we call an immediate rebalance, which is usually a sign of further downside, or if it was the other way around, further upside. It's a algorithmic signature that gives us the impression that we're going to come lower. So bearing in mind, we're on the 28th of the month. So what's going to happen? Let's look at the economic calendar this week. So it's actually quite a volatile one because we've got Wednesday, the 30th, we've actually got the Fed's funds rate. And it's saying here previous was 4.5%, and the forecast is 4.5%, but there's maybe the scope here that the surprise rate cut. I mean, Fed Chair Powell at the last Fed meeting, he actually gave a signal that there could potentially be a rate cut, I think. But the thing with the Fed is they're there to guide the market. So they kind of talk through it. It might be a bit surprising if they did do a half a basis point rate cut, the markets would fly. But this also ties in with my idea that August Bitcoin's going to be at 150K. So, I mean, if there was a surprise Fed funds rate cut here, then that could be the catalyst for what I potentially see coming in the markets anyway. So there's the potential here that we do get a surprise rate cut. For the DXY, that could then send the DXY lower. Gold as well, if there was a surprise rate cut, gold would sort of roll over, I think, although I don't trade gold. So here, the price action's telling me lower DXY, right? So we've also got next month's candle. Now, when I talk about the open, the high, the low, and the close, so on the very first, we've actually got NFP, non-farm employment change. So that's actually quite a volatile thing as well. So as I think about next month, I'm not really sure how it plays out. I'll just need to wait and see because this will be really probably the turning point, I would have thought, for the month. But it's the very first day. Because in the following week, you've got the ISM, then you've got the Great British Pound news here for their bank rate. So it's a tough one, I think, going into this week and into next week. It's probably going to need to be one where I really observe at the time to understand. So for this week, we've got JOLTS job opening on Tuesday. We've got the non-farm employment. This is the number before. We've got the Fed funds rate. So, and again, so see this here, it's at 4:15 p.m. in Abu Dhabi time. So that'll be 1:15 for you guys. And then you've got the Fed funds rate away at 7 p.m. UK time. So what tends to happen here is you'll get this move during the day will go one way. And then when the next news piece hits, like at 10 o'clock, it'll go the opposite way. So that's something that I'll monitor as well. And then for the 1st of August, again, we'll just need to wait and see. We'll see if there's key levels that get taken on. So non-farm employment, sometimes it's a two-stage delivery as well. So you'll get the move one way and then it'll turn and go lower, and that'll be your sort of trend for the next few weeks. So there may be like a monthly key level, an old high that or an old low that non-farm payroll wicks up, takes it, and then reverses. And at that point, I'll potentially open a swing trade because a lot of the times this is the sort of thing that happens. So I will post this week. We'll keep it updated. I'll say what I'm looking at this. So this was the monthly. So if we go to the 1 week, we've just opened up our new week. So if you see here, actually, now this weekly candle, so last week's close, I was monitoring it because although we had this immediate rebalance, this line here that I've got mapped up for the monthly immediate rebalance, I was wanting to see if this body had failed to close below last week's low, right? I was wanting to see that. Now, what's also interesting, I've got this inverted fair value gap over here, and we've also got this other fair value gap from here to there, right? So I want to see if this body failed to close below that low and closed back inside here, then I would have been going, oh, wait a minute here. Maybe we are going to come higher. It would have put a bit more doubt in my mind. But I think because we managed to close below the weekly low, and we've managed to close just inside this inverted fair value gap, we're also inside this fair value gap. I feel like what's going to happen this week is we're going to come a bit higher and then we're going to roll over. So potentially there's a few key levels that I'm looking at. So like this here should act as some form of resistance, the volume imbalance. We slice through it. If price comes back up, would maybe like to see that act as resistance. But I'm looking now for the first part of the week to probably go higher on DXY because this is saying to me we're coming lower on a monthly scale. So really, if I think about a weekly candle, if I'm bearish, I'm looking for it to open. I'm looking for a fake move, manipulation, higher, so people get trapped going long, or the market's rallying, and then the market goes and makes the body of the candle. So just like this. So it opened here, it ran up here, it took the high of this body, it then reversed, it went back through the opening price, and then it made the body of this candle. It ran all the way down here, and it made the tail, and then it ran back up. So you've got the formation of the candle, and on this one, it opened here, it ran lower, it came back up through the opening price, it was bullish, it ran all the way up here, and then it came back and retraced. So understand the formation of that candle. This is what I go on in the course. Understand the formation of the candle and understand that like the body of the candle is made up on a Tuesday, Wednesday, and a Thursday generally. So that's this, and it's the same for a monthly candle. First week, manipulation. Week 2 and 3, the body. Week 4, still part of the body, and then it makes the tail. That's just a really good basic framework to use. And that's pretty much the basis of my trading now. I'm really looking at the candles. I'm looking for the manipulation. I'm looking for the old levels, the old highs, the old lows, the weeklies, that sort of stuff. So I'll just delete this. So we start the way up here. We've taken the weekly low. I feel like because this is closed below there, we're still bearish. I'm looking for on the daily now. So I'll mark that up on the weekly. On the daily, now, I don't think it would be too difficult. So remember, this is my weekly volume imbalance. We just label that up. Weekly volume imbalance. This is a weekly inverted. No, it's not. Is it a month? No, was that a daily? Actually, yeah. So it's on the daily, right? Inverted as well. I don't think we're going to come back up as high as this, but you've got this fair value gap in here that I was looking at. So back up into the middle of the range. So in terms of a weekly volume imbalance here, we could possibly get price come up higher here, wick up, touch the daily fair value gap, and then roll over to start making new lows. That's the way I'm kind of leaning just now. Again, I just play it level by level, right? I put these logical areas. If I see price come up here and then I start to see a reversal, then that's what I'm looking at. If price comes down here and starts to come lower, it's probably at the start of the week, it's not tying in with what I'm thinking. So then I'll just wait for more information. And there will be other opportunities. I think a couple of you guys have seen this already. So it's all about just waiting, get more information until you're comfortable. So let's go back to the weekly again, and I'll just flick across to EU. We'll look at EU. So I had this marked up from last week. So again, we started here, we came down, we never quite reached that. That was fine. We came down, we ran higher, on all the way up to here. So again, I was looking, we had the previous week's high here and the previous week's low marked out. So we came up, we've taken the previous week's high. Let's see what happens today. Let's go to the daily. And again, just remember the DXY is just the opposite. They're slightly different, but I mean, they should just work in complete opposites. When we get SMT and a cracking correlation, that's interesting. So what happened here? We came down. Remember I said on the daily, we came here and had an immediate rebalance. We then rolled over a bit. And if I go to, that's the daily, if I go to the 4 hour just to see what we'll be getting. So a bit messy really in here. We had this previous low, we came down, we took it and we reversed higher. You see we've now got this gap. So EU, I don't feel is as clean as DXY. So really, I would be using DXY to try and figure out what's going to be happening, and then I'll correlate that back in to, I've got this area mapped up on my chart as well. I think that's a weekly level, monthly. So it's actually a monthly fair value gap there. So as price is reaching, that there, see that fair value gap? So as price reaches away up here, right, and so bullish, now when it stops here, I'm looking along here, I'm going, right, why is it stopping? There's nothing really that obvious to me in there, right? Maybe a weekly. Is there a weekly fair value gap or something in here that it's stalling there for? So you see that there? That's just a weekly fair value gap. Let's see how that ties in. So there, it's been respected, right? But usually, gents, you'll see that there's something on the other side of the chart. Right? It's not just stopping in random places. So this is acting as a bit of resistance just now. Came back into support. Got this here. That's fair value gap, bullish fair value gap. So it's came down. It's bounced back out here. We managed to close back above previous week's high and back above this fair value gap. So to me, it looks bullish, right? This area here is an area that I'm looking going, right, then there can maybe be a relief potentially, but we'll wait and see. I'm not married to any bias or anything like that. And again, just see here, the bodies tell the story, the wicks do the damage. So as this comes all the way down here, people are getting stopped out left, right, and centre. But it's the daily close or the weekly close. That's where the candle close is what tells us what's happening. So the fact that we've got this bullish, I'm going to actually turn that green just so you associate it with bullish. So the fact that we've came all the way down here, we've wicked down, and then we've closed back up outside of this fair value gap, that's bullish. And we got above the previous week's high. So that is also bullish. Like I say, I would like to see probably it come down a bit. It can maybe come and touch the top of this fair value gap and then push higher. Let me just pull up a 1 hour chart and see what corresponds. So you've got this. I mean, it would make kind of sense to me if So we've got Friday's low, Wednesday's low, and you've got Monday way down here. So previous weeks, there's liquidity below here. So it wouldn't be unreasonable, I don't think, for price to come down here to take this low and then reverse. Now, that kind of ties in with here as well. So that's DXY. So this is DXY's Friday high. So again, my idea that potentially we come up, we then run up into the weekly volume imbalance. This is the daily, oops, that was a minute move. This is the daily fair value gap. So potentially we come up, we wick into here. And this is the idea that it's internal range liquidity. So this is liquidity in the internal range. And then it would be internal range liquidity to external range liquidity, right? So let's see how it opens. Let's see. Again, Mondays aren't a day that I like to trade. Mainly just trying to see the way it goes. Some volatility, 3 p.m. UK time for Jolt's job openings on Tuesday. But we can maybe play it. If I see things, I'll obviously put it into the Discord. We'll monitor it. We'll make sure that we're picking our spots correctly. We've marked out now some logical levels, what we want to see. We're still bearish. So our rally up at the start of the week would be nice into these key areas. We could then open shorts and play the rest of the week potentially. When it comes to high volatility news, if I can get in a trade, great. It's hard sometimes to understand which way the market's going to go. So if you can get in a trade, you can get in a bit of profit and you could set your stop loss just below your entry or just above your entry, then you're just limiting your risk. But there's potentially good downside or good upside. So yes, that'll be my outlook for this week. And I'll update into the Discord when I see anything, or if there's anything worth noting, then I'll pop it in there and say, look at this. This is what's happened. This is why. Okay. Let's have a good week in the markets. Last week was 2.5%. Let's see what we can do this week. We're not going to push anything too hard. We just wait for those trades to come to us. Okay. Right, gents, have a good one.